Okay, so welcome everyone. So I'm going to show you, we're going to talk about support, resistance, order block, and stop loss. So these are the three major things we're going to talk about. And I'm also going to talk about what I call the storm region. Okay, so now starting with the support and resistance. So support, we have our support like this. Okay, let's say these are charts going like this. Okay, so now your support is like the floor of your house. Your support is like the floor of your house. So I'm going to call this my support. Then your resistance is like the roof of your house. It's like the roof of your house. Okay, resistant. So now let's say market always tests. It always tests the support and resistance. They always range at that level. Now the support is like the buy. The support is the base, while the resistance is the top. Okay, now we have what we call buy, we have what we call sell, we have the bull, we have the bear. Now the bear are when market is selling, while the bull is when market is buying. The support is the base, the resistance is the top. Selling is when market is dropping, and buying is when market is going up. Selling is the red candle, while buying is the green candle. So now let's say markets start ranging like this, came to this resistance level, okay, then retested and reacted at that level, then dropped. Okay, once market dropped like this and comes back to the support and bounce back, you know that okay, market is bouncing back. So the moment it breaks out a particular level, which is either this resistance level right now, because this is a resistance level, so when market breaks it out, you know that market is actually out of that range. If it tests the next resistance level, it will come back into the support level, because now this was your resistance level before. Now your resistance level now cannot turn to become your support level. It now becomes your new support. It's no longer your resistance again, because market has now broken. So this is now your new resistance level. Now this becomes your support. So market boom retest back at this level. Once it retests back, it will now push back up again. Okay, so now you are now looking for your entry point at this retest. So now where should you take your profit? Your profit is right here. This is your first take profit, and this is your second take profit, because market will come back here and react. It might come here and react and drop. Okay, so but already you have taken a profit, or it might come here and push to the top side. You will not take another profit again. Yeah, so the first take profit is here, the second take profit is here, because if market react at this level and drop, you'll be out, and you don't want to stay on the market until it comes and knock you out. So your first take profit while you buy at this level, then your second take profit right here. If market now breaks down this level, you know that okay, market has broken down this level. You can now start looking for an entry point for sell here. Once you start taking an entry point sell here, your next take profit is here and here. This first one and this second one. So that's how to identify the support and the resistance. That's how to take profit, and how now your stop loss is going to be below. Let's say for instance now you took your trade right here. Okay, let's say you took your trade right here. Okay, once you take your trade right here, your actually your stop loss should actually be below this one, because if it breaks here, you are going to be out of the market. Okay, you're going to be out of the market because market is going to keep pushing down. So your stop loss could be here. But in the case where you have a small margin, and maybe probably this is a long distance before market breaks it, you can see some range around this level. You might see some ranges around this level. So just look for that range and put your stop loss. It could be, now that's where you can see traders say 1/4. I'm going to teach you that later. Yeah, 1/4 and the rest of it. So that's now where you can now start looking at putting your stop loss. Okay, so but basically your stop loss is going to be below that range where you entered. Once market is now going up, you can now start putting your stop loss while you go up. Okay, so now that is for the support and resistance. Now I told you about this same thing which cause support and resistance is also our higher highs and our higher lows. I've taught you about those higher highs and higher lows and lower highs and the rest of it. When you are drawing your chart, draw from those levels. We call it higher highs, we call them higher lows, lower highs and lower lows. We also call them resistance and support. Yeah, So resistance and support, like my higher highs and my higher lows. Let's say by then I already have a trend going up already. Okay, I already have a trend, so I can easily spot out my higher highs and my higher lows. Now this trend is already going to the top side, so this is my lower lows, this is my higher lows, higher lows. Okay, this is my higher high, because it's not breaking the previous highs. So this is also my high, this is also my resistance. This is my high, this is my resistance. Now this one, which is my high, now turns to my support because there was a one which broke it. So immediately my high is being broken, or my resistance is being broken, it automatically turns to my support, because now we have another resistance level. It now turns to my support. Okay, so that's how to spot out your higher highs and your higher lows. So this is my higher high. The moment market is ranging to the top, because now I have a trend already, and the trend is bullish. Okay, now this bullish trend now already shows that market is now giving me a higher highs and a higher lows like this. So the next thing I'm still going to be waiting for it to come like this. Okay, until market changes character. Until the character changes. The character changes simply means it's might start like this, come like this, range like this, come back to this level, then broke. Once it breaks this previous level, that means character has changed. You cannot start seeing it going ranging down like this again. So by then character has changed. It's now a bearish moment. So instead of we calling higher highs and higher lows, now we can now start saying lower highs and lower lows. So now the one below, this is my lower highs and this is my lower lows. This is my lower high, this is my lower low, this is the one at the top is the lower high, the one base is the lower low, lower high, lower low, going on and forth. Okay, now so let's look at the order block. I use US30 to talk about the order block. Okay, now on US30 there was something I showed everyone, okay, in the live class we had. In the live class we had, I used this as an instance to show everybody how the order block works. Okay, now the order block, this is actually where activity started happening for me. So that's where my order block is going to start from. Let's go to my to this level now. Okay, I think on stay back, just hold on please. So now let me draw my order block for you. So now order block, first candle started here, then the next candle, already we had an activities here. We had an activities. I might draw the activities. Let me just draw this one first. So activity 2 and then activity 3. Okay, this activity 3. So this activity 3. So now we already had a range, something like a range that happened here, everything happened here. Okay, things happened here. Then from here we now had this thing that finally, we now had this one that finally broke us. So now this is my order block. This is my fair value gap. Your fair value gap is the third one. Your order block is the first one that actually caused the breakout. The one that caused the event to start happening. The one that caused it is your order block, while the third one is your fair value gap. So when you are drawing your chart, to map out, you start from the base of the fair value gap and the top of the order block Okay, so now let me first of all draw my order block. Start from the top of the order block to the base of the order block. You draw your line. Okay, now this is my order block. Let me change it to my order block. Okay, it's already on my order block. So this is my order block. Now my fair value gap start from the base of where it started from to the top of the order block. So this is where my fair value gap started from to the base of this one right now. So this is it right here. Okay, so this is my fair value gap. This is my fair value gap right here. Change it to my fair value gap. So now this is how to spot out your fair value gap, okay, and your order block. And market is going to range into that level. Market will range, okay. Market will range. It might range like this, go up like this, still come back into your fair value gap or your order block. Once it's before you now see it go up. Now that's exactly what we have on this US30 right here. Now on US30, I've already spotted out my fair value gap, my order block on this US30. I've spotted out my order block. Now this is my fair value gap. Fair value gap is too far, so I might not actually yield to it. If you can see, it came at this fair value gap level and bounced back up, but I'm going to stick to the order block. Let's look at the previous one here. Now this is the previous one. If you can see, I actually drew this on, let me go on 30 minutes. Okay, yeah. So I'm going to take it right here. I'm going to take it right here because this is where it started from. Good. So I'm going to use this. I'm going to use this one. I'm going to use, let me go on 1 hour, sorry. Because you have to take different time frame to know how to, okay, now this is actually the one I could take as my fair value gap, as my order block. This one here on 1 hour. So now you could see I drew this chart before all this thing happened, okay? Before all this thing happened. So now from here, boom, market started from here, okay? Market started reacting at this level, then went up, came back into my order block, retested. It even retested 2 times. So you see, retested the first one, second one, before market now started going up, okay? So now that is how to spot out your order block. Now this is my next order block. So I'm waiting for market to come right into this order block before I can now start taking a trade. So that's how you spot out an order block. You spot out an order block from the first and the third. The first and the third. Now, once market range into that level, you can now start opening an entry. Another thing you can do is to backtest any chart you are trading, any pair you are trading. Backtest it to know which one it respect the more, okay? Backtesting simply means go in time to spot out your fair value gap and your order block, then compare which one respects the most. If the order block respects the most, you can now start waiting for order block to trigger before you open a trade. If fair value gap respects the most, you can now start waiting for fair value gap to trigger before you open a trade. So now that's how to identify an order block and fair value gap. Very simple and very clean. Just use your resistance and support. Use your lower highs and higher highs to draw your trend lines. Okay, then use your resistance and support to know when market is breaking and when market is changing structure. Okay, then come to the lower time frame. Like I said again, use for day traders 30, 45, 1 hour, 2 hours, 3 hours, 4 hours, and daily are the period where you should be checking your chart. Then 15, 5, 3, 1 are your time frame where you should be executing your trade. Okay, now let's go to the next one, which is the storm region. Okay, the storm region. Now the storm region for me is very key to me, okay, because the storm region simply means these are when markets had a bullish moment, then now retreats. Okay, it's either bullish or bearish moment when it had an activity. When the market is raging, you wait for it to calm. Once there's a calm, you can now start opening a trade. Okay, now if you are chasing this kind of market, now that means you are chasing a falling knife. I call it a falling knife. Okay, you are chasing a falling knife. You are trying to FOMO, FOMO, fear of missing out. You are trying to FOMO into the market, which you shouldn't do that. So wait for market to range. For instance, now on 4 hours on gold, this current market right now, 4 hours on gold, this is like a major level for market to start pushing up. Yeah, if you can see, 4 hours has even created, it has new candle has even been created here now. Now this is actually a good level to actually start entering. But now before you enter, what should you look out for? Look out for that storm region. That storm region is under these 4 hours. Now this 4 hours is showing us we can actually open a trade because this is actually support level. It actually came to that support, retested it, and is bouncing back up. You can see it reacted to that support level. But me, what I'm going to do based on experience is I'm going to wait for the rage to happen. What is the rage? The rage is, as market came to this level, it's going to push a little bit up. Okay, come back to this level again for me. It might even go a little bit down. Does not matter, because sometimes it does like that, or sometimes it just respects the same level. So let's say in the case where it reached down, it went back up again. It might come, push to the top side, then come back. Now this is now where I'm going to start taking my trade. This is now where I'm going to start taking my trade. Then the trade will go up. Now let's use this previous one as an example. Okay, this previous one came at this level now, bounce to this top. Okay, someone might say, okay, 4 hours has actually locked in at this level. He might start taking this trade here. Once it goes up, you might be making profit, but look at this. It came down, knock you out. You are out of the market. And if you can see, this is not a rage. This is not a cool off. It's still raging at this level, because the cool off for me is go up, retest back, either break down, I don't mind, either break down, come down, go up again, the next one, as long as the next one doesn't break, that's where I can now start entering my trade. So this particular trade right now, I'm not going to enter it until it rage and cool off. Your cool off is where you can now start. So that is how you take your storm raging trade. Once it rage, cool off, you can now start taking your trade. So that's how to identify it under 15, 3 and 1 minute. More especially 15 and 5 minutes. 15 and 5 minutes is your major time frame to identify your cool off for us who are long-term traders, like day traders. So we cool off at 5 and 15 minutes. That's where we cool off. Then we take our trade where we watch out is 30, 45, 1 hour, 2 hours, 3 hours, and 4 hours, and daily. That's how we watch that's where we watch our trade. So now that is how to identify a trade which is about to reverse. Then the last one before I now go to the phone aspect is, wow, what this just happened under 5 minutes. That was massive. Okay, now how to put your stop loss on the desktop. I'm going to do the phone on in a separate video. So how to put your stop loss on the desktop. Okay, once you set up already, click on your new order. See it at the top. See this new order right here. So click on new order. Once you click on new order, you can see stop loss and you can see take profit. So before you even come here, you have already analyzed your market. You know where your market is going to go. Okay, you know your stop loss. So now let's go and analyze the market now. So let's say this is our market, okay? And I use my tool called, this tool is called short. This is called long. It's called long. This is where you go get it. Come inside here on trading view. You can only get it on trading view. So this is called long position. You take your long position tools, then start from your entry point. Let's say this is where I'm going to enter my trade, okay? I'm going to enter my trade. Then this base now is going to be my stop loss, okay? This base now is going to be my stop loss. Then this is going to be my take profit, depending based on my analysis. Remember what I showed you here, where you can take your profit and where you can put your stop loss. You use this and identify your TP and identify your stop loss. So already I've done that and I've identified my stop loss. My stop loss should be below here, and this is see it right here. Let me use this too. This is 3359.889 and my TP is 3389.11. okay, and my entry point is 3362. So let me now go to my MT5 and put it. So my entry point is 33. The gray one is my entry point, the gray. So the gray one is 3362.495. 3362.495. This is my entry point, 332495. I want to open an order, pending order. Pending order is 332. Let me check it again. 3362.495. 3362.495. 3362.495. That is my entry point. Okay, now my stop loss is right here. Okay, so let me now look out for my stop loss. My stop loss is where am I doing that? Okay, good. My stop loss is at 33598. 33598. My stop loss is at 3359.8. Then my TP is 33851. 33851. Then my TP is 3385.9. So once you do that, you can now place an order. You can see I've placed an order on US 30. Okay, on gold. It's supposed to be on gold. So you can see, let me check. You can see I have a pending order right here. This is my pending order right here. My history, let me go to history, show history. This video is getting longer and I don't want it to get longer, but by the way, let me see if I can go on daily. Okay, so but by the way, this is it. So this is my my order has been opened. Okay, my order has been opened, so immediately it takes my stop loss triggers immediately, and my TP also triggers immediately. But if you can see, there is another thing which I want you to see here. There's what we call lot size. Okay, okay, don't worry, I'm going to talk about that in the next video, because this video is already 20 something minutes. So that is how to spot out this. Please watch this video more than once so that you can understand what I just spoke about. Thank you.